Hi everyone, today we are going to talk about a fun way to invest called momentum investing. It's a bit like surfing. You try to catch the big waves and avoid small ones that won't take you far. So momentum investing means you go with the market's flow. The stock has been going up for a while. Momentum investors think something is going good is happening with the stock. Let's buy some, and often they are right. But if a stock is going down, momentum investors usually stay away because they think it might keep going down. So how do you find these trends? It's like being a detective. We look at how the stock has done in the past few months, compare it with other stocks and see how many people are buying or selling it. But remember, the stock market changes all the time. Stocks that go up can also come down, and stocks that are down can go up again. That's a market. So momentum investing means joining in but also knowing when it's time to leave. It's like Mahabharata's Kurukshetra war where Chakravyuh Abhimanyu learns to enter but he doesn't know how to exit. So momentum investors know properly how to exit. So grab your surfboards and let's ride the stock market waves. Keep watching. I'm going to share some great stock tips and 4 stocks we are going to discuss. And if you want to keep up with the investing tips, don't forget to click like, subscribe and hit the bell for more videos from Mindful Finance. And this is Sundar. Momentum investors should really be called traders because they don't stick with the company. They just wait for a big move in the market, jump into the ride to ride the wave, and then get out as soon as the momentum stops. So looking at Rain Industries Limited, which is called Rain on the NSE, we find a big company that works with carbon products, special chemicals, and the cement. So these areas have a lot of chances to grow. Rain Industries stands tall with a market capitalization of 6,764 crores, signaling a strong industry presence, and their PE ratio sits at competitive 23.0, hinting at an undervalued stock ripe for the pick. So with a debt to equity ratio of 1.10, the company demonstrates a balanced use of leverage, enhancing the appeal to risk conscious investors. Rain Industries is not just focused on one area. It has a wide range of products that include important carbon materials for making aluminium and special chemicals used in many industries. So this variety helps the company to make more diversified and to make more money from different sources. Looking at how the stock has moved, we see a trend that investors really like: steady growth. That's very important for anyone, right? It's a steady growth. And the stock price of Rain Industry has gone up a lot, showing that people really want what it sells. The last 3 years, the company has grown continuously with its sales increasing by more than 10% each year on an average. The carbon products made by Rain Industries are not ordinary items. They are crucial for making aluminium, a field that is growing because of worldwide interest in lighter materials. So Rain Industries is also an important company in the field of advanced materials. Its chemicals are used in many areas including building and electronics. Rain Industries Limited stands out in the world of investments for the strong financial health, varied activities and global reach. It's not just any stock. Let's show you a sample of its chart and see how the momentum in Rain is. So let's see the chart for Rain Industries now. Let's go to the weekly view. Okay, you can clearly see, right? It has given a very good breakout, right? It's a triangle breakout. So it's a very good moment. Currently it is very good momentum. See the momentum, see the volume here. So when it gives the breakout, it can, from here it moves, right? So your target can go till 283. Okay, when you capture the momentum, it can go till this area. Yeah, but still, as I keep on telling you, we are Mindful Finance and we are investors, and I just want to invest and stay in the market, not just book the profit and get out of. It's all upon you. So just do a thorough research on this and keep a proper risk reward for this one. The next stock we are looking closely at Stovecraft Limited, known as Stovecraft on NSE, a leading name in home appliances. Stovecraft is not just any company making kitchen gadgets. It's a pioneer creating kitchen products that are both beautifully designed and practical. The market value of rupees 1,571 crore, Stovecraft is making a big impact in its field. It has a PE ratio of 61.6 and the ROE of 9.29%, showing it's good at making profit from investments, which is great news for its owners. At its core, Stovecraft wins customers with its Pigeon and Gilma brands and also partners with international brands like Black and Decker. It offers products for every kind of kitchen enthusiast who are looking for affordable, but still it should look like luxury brand. The Stovetcraft's stock price has been consistently going up. Its focus on new ideas and reaching more customers has made it a strong contender in the competitive kitchen appliance market. The company has a wide reach, being present in over 83,000 stores. It plans to open 75 to 100 new stores in the next 12 to 18 months, which shows it's serious about growing even more. Stovecraft has two manufacturing sites in Bangalore and one in Badi, with the ability to make 68 million units every year. This means it is well equipped to keep up with high demand. In summary, Stovecraft Limited is an excellent choice for investors looking for growing companies with strong finances, smart brand strategies, and ambitious growth plans. It's poised to add value to investment portfolios. It aims to not just capture a part of the Indian market but fully seize the vast opportunities ahead. You might be thinking I'm talking about investment here. Yes, even though I'm talking about a momentum based one. Whatever stocks I am picking here right now, it is since we are mindful finance people, I want to be more focused on mindful investment strategy. Even though stocks are in a momentum strategy, even the momentum slows down, still you can hold and continue. That's what my mindful finance followers should do, right? So that is what my expectation also. So let's look at the chart of Stovecraft. See, this was the time the IPO launched, which is 2021, and it went below the support level. See the level which went, it reached almost 1000 rupees, right? And it fell to around 370 and it raised. If you see, as we know, this is our higher low, right? You can clearly see the higher lows. And if you see the level currently it is, there are chances. So this can go till 780 rupees. There is a chance. It has a good potential to go 780 rupees. So just as I mentioned, keep on telling you, this is a momentum trade. So momentum trader cannot go till this level. So you can just focus for a shorter trend, which could be around 560. So that could be the level for momentum traders. But if you want to hold, I would say this can go till 800 rupees. So shifting gears to Zim Laboratories Limited, listed as Zim Lab on the NSE, we find a pharmaceutical innovator eyeing global horizons. The market cap of Rs 554 crores and a PE ratio of 33.8. Zim Lab is not just on the radar, it's a beacon for those tracking momentum in the pharmaceutical sector. A deep dive into its financial reveals ROCE of 16.6% and ROA of 7.15%, highlighting Zim Lab's efficiency in resource utilization and profitability. Such figures suggest a firm with its financials dialed in, ready to capitalize on market movements. But what truly sets Zim Labs apart? It's their diverse and innovative product range, from pellets to oral films, catering to essential therapeutic segments. So this innovation is cornerstone of their strategy, driving growth and capturing investor interest. And where does Zim Lab stand on the global stage? With 75% of revenue stemming from exports to regions like Asia, Africa, the Middle East, Latin America, and Commonwealth countries, clear that Zim Labs has cast a wide net, positioning itself as a global pharmaceutical contender. So growth metrics further illuminate the path Zim Lab is on, which is a remarkable compounded profit growth of 95% over the last 5 years. This trajectory is underpinned by their agile product development and expansive customer base, emphasizing their growth potential. With 3 state-of-the-art manufacturing units in Nagpur, Zim Lab is equipped to meet the surging demand for pharmaceutical globally. In essence, Zim Laboratories stands out for its strategic vision, global reach, and proven track record, making it a compelling pick for those looking to harness the power of momentum investing in the pharmaceutical sector. If you look at the chart for Zim Lab also you can see it is getting the momentum now, right? So it broke the initial level, it went down, and this is again making a higher high here, right? So this is the higher high, and target we can expect from this stock, if it breaks this one, if I go to a daily chart, it is not getting the momentum properly. It may consolidate. You have to wait for this one. Okay, when it breaks this particular area, which is 123, if it breaks this one, it will pick a very good momentum, and it can go. So there is a high potential for this stock to go to till 185. So, but you need to wait. This is currently it is still the momentum is not captured, but volume wise it has given a very good recent volume breakout. Okay, so you can see the great volume over here. So that's why I picked this stock for momentum for now. Volume wise, it has given a very good breakout. So consecutively, like two green volumes you can see, right? It's a heavy volume. This is a very good candle over here. So this shows a reversal over here. Okay, so just keep a watch on this one. So next one, the final one is the heart of the energy sector. We spotlight Oil India Limited, a titan in oil and gas, known on NSE as Oil. With a commanding market cap of 62,207 crore and a lean PE ratio of 8.93, it's a stock that demands attention for its valuation and growth prospect. Oil India is not just about impressive numbers, it's about strategic efficiency. Boasting a ROCE of 25.4% and an ROE of 25.2%, this company knows how to generate profit and return values to its shareholders. But there is more. A dividend yield of 3.49% makes it attractive for those seeking income, while a low debt-to ratio of 0.56 signals financial stability and prudent risk management. What truly sets Oil India apart? Solid footing in the industry, backed by a higher promoter holding of 56.66%, reflecting strong management confidence in its. In just a minute, we have seen how Oil India Limited stands out as a beacon of stability and potential in the energy sector, making it a prime candidate for investors aiming to power up their portfolio. Let's check the chart for Oil India now. See, it was consolidating for a long time and it broken that, and it is in a highly momentum way. Okay, it is very highly momentum. So currently it is consolidating over here. I don't think it is slowing down, but profit booking are always there, right? So you can catch up the momentum, and it can go till 678, 755. These are the levels I can say. But it's a good stock to hold also. I mentioned 4 stocks, but here is the bonus stock for you. So this is a port is India's first private sector one, right on the main shipping route. It's a big deal for trading. Now let's talk about the numbers of this stock. The company's worth or market cap is 9,589 crore. That's a pretty big, right? It's a good market cap. So investors are okay with a PE ratio of 25.8, meaning they believe the company's earnings will still grow. With ROCE at 20.6% and ROE of 15.5%, it tells us they are smart with their money. And guess what? They hardly have any debt with a debt to equity ratio of just 0.04. For those who like a steady cash flow, the stock also provides a good dividend with a yield of 3.08%. It's like a thank you note for investing. Their assets are working hard too, which is 12.4% return, which is ROA. The company is keeping a steady hand on wheel. Cash is flowing in positively. They are taking a bit more time to pay off, which we should watch out. They have been saving up with reserves growing nicely, a bit more borrowing recently, but that could be for some exciting expansion. And here's the cherry on top. Sales are growing up, and their profits even better, especially in the last year. So they are making a steady profit from their day-to-day business. But it's not all smooth sailing. They had some trouble with a cyclone, but still they are bouncing back. In a nutshell, the stock is Gujarat Pipavav, standing strong with good money management and growth. So they have got big plans and they are in a good spot to make them happen. But hey, always keep an eye on the sea because conditions can change. So let's quickly go through the Gujarat Pipavav. If you see the stock's performance over here, you can clearly see how it has been consolidating and accumulating. So this is called accumulating phase, and it is trying to break the long-term resistance. So you can see the target. So this stock is clearly shows the momentum, and the target, this stock can go till 279. Currently it is around 198. So there are chances it can go 279. So as a momentum investors, as I mentioned, you should know your risk appetite. You should know how much risk you are taking. What is your stop loss? What is your target, right? So your stop loss could be around over here. Your stop loss is this big green candle, which is 168, right? And this is your risk and this is your reward. So we look upon 4 stocks plus 1 bonus stock. All are momentum building stock, and keep a watch. Make sure to research for yourself, understand the risk reward ratio. Don't just jump into the ocean like without knowing the depth of it. Be careful, stay safe in the investing, and if you like this video, press like, subscribe, and do share it with your friends and colleagues. Thank you.